As far as a sufficient number of people that want to live here, that make good money and will rent,
The benefits
there's
of
no
rent
end in
control
sight.
is the tenants expect their rent to go up because they know what's allowable. So they're already
You can
baking
move rents
in.
a long ways on a property over a few years at 8.5%. Hi, I'm Duane Lappinga, Director of Asset Management with TR Wealth, and I'm joined today by Rachel Giordano, who's going to be our moderator, and Bill Mulkey, the owner and president of TR Wealth Management, for our podcast entitled Why It's Almost Impossible to Lose Your Shirt in California Multifamily Investing.
Oh my God. First of all, I love that title. That's incredible.
You notice that I said almost.
Almost. Oh my God. You guys, I want to start with Bill because we've covered your success in California. We've discussed it on other episodes, but just for starters, I want you to give us an overview of your success in California multifamily.
Oh, you guys really want to hear about 40 years? So I'm going to have to condense this down.
The brief overview.
Started as a spring chicken. No, I started young. I went to college. I was influenced by a professor. He talked about how you can make big money in real estate, and I was learning how small things could make large things happen. I became educated in real estate. I got a broker's license. I tried to put it in practice right away, flipping my first home. I learned that I'm not a contractor. I made money. I went to work for a large real estate outfit. I got some training. I have some advantages that investors that don't have a lot of real estate training or background or education don't have. But I spent so much time in sales trying to convince people that to sell their buildings versus how to keep them, how to run them, how to trade them, all kinds of different things. I learned that most people bought one property and kept it for their lifetime and did really well. I said, I want to do better than that. And so I started buying myself in the early 2000s. It took me a long time, almost 10 years. 10 years I stopped my life waiting for something I wanted to do because I had no money. I started real estate in a really hard market, and I ended up buying a property, and then that's where I made all my success. They call it a broker or a principal. And I became a principal, and I was a buyer, not just a broker.
How multifamily? Was it like a duplex or was it like an apartment building? What are we talking? Like, what's multifamily?
It's a big leap. I did buy a house I flipped, but really this was a 9-unit apartment building, which is pretty big to start with. Yeah.
That's huge. That's amazing. Because just from looking at different properties to invest in, myself and my husband, we immediately were like, why would we invest in one when we can get like a duplex or we can get 4? Like, why would we not invest in a multifamily? Because you can actually make more in the rent. So I think that what you did was smart. I know it's a risk, but I think that's just an incredible leap. That's amazing.
You can, just to add on to that, you were smart enough to see that. Not everyone sees that because it's just, they only can get what they can afford. But you could actually, it's more affordable to buy apartment units versus a home, because who do they qualify when they buy an apartment building? When they buy a home, rather, they just look at you as the only sole provider after tax money. And if you're smart, you don't want to pay too much in taxes, so you don't show a lot of income. So unfortunately, you don't do that. Buying a duplex has a second income, triplex third, fourth, etc. I think a good place to start is a 1 to 4 unit, like 4 units max. You're still in the single family type lending. Single family rates are a little higher than multifamily rates. They didn't used to be that in the 90s and 2000. It used to be the other way around because they saw multifamily as more risky because they thought that tenants didn't take care of the property. Now they figured out, wait a minute, it's more risky to make a bank to make a loan to a single person because they could lose their job. Same with buying a house. You can make a lot of money flipping houses. Don't get me wrong. I'm not poo-pooing that. But if that one person loses their job or falls on hard times or gets drug addiction or whatever happens to people, depression, whatever really happens, then you got nobody paying and 100% of your income gone. So you want to spread out that risk and buy more units if you can, as soon as possible.
I want to talk about risk with Duane because it's your favorite conversation, Duane. So many investors are avoiding California due to rent control and other regulations, but you say California is still a viable alternative. Why?
Looking backwards, we just spent the last episode we did talking about how Bill bought a building for $450,000 in the year 2000. 16 years later, he sold it for over 2.6 million. So they always say with stocks or whatever, hey, past performance is not a guarantee of future results. But I think that is a useful indicator. But then people say, I don't rent control because California has a new rent control law. Keep in mind that first property Bill bought actually did have rent control. So you could do well in a property that has rent control. And actually, our state law is CPI plus 3.5%. Or I'm sorry, CPI plus 5%. The CPI right now is 3.5%. So that means you could raise rent 8.5%. You could move rents a long ways on a property over a few years at 8.5%. So really that law is not a showstopper. So I think people tend to look at things and just dismiss. And I think you got to really look at what kind of opportunities California has.
Okay, so another concern is negative population growth. Does this concern you guys? Does this concern you, Duane?
You're going to love my answer. Yes and no. So I've actually been doing some research on this for a blog that I want to send out because I think this is a fascinating topic and I can see why people are concerned about it. So the thing is, yeah, we're getting net negative population growth in California. Thing is, there's so many people here with a high net worth. There's so many high paying jobs that it's like, you're talking about millions of people and we're losing a small percentage of them. There's not enough housing units to go around as it is. So really, quite frankly, it doesn't move the needle. However, people are leaving the state because of things like regulations, overcrowding, high cost of living. And I do think that from a public policy standpoint, I'm not running for office, but if I was, I would be saying, hey, we need to work on some of these things because they're making it harder to live here. They should be making it easier. But as far as a sufficient number of people that want to live here, that make good money and will rent, there's no end in sight as far as the supply of renters. So we don't really concern ourselves with that in the short term.
Okay, but Bill, so you own and manage properties in the city of LA and Greater Los Angeles. So how do you navigate rent control then?
Duane and I work together. It's great that he has this research. Like on one side, I want to act like, hey, I care about everybody, which I do, but I'm not in a position to help everybody. I can only help me and my investors and some things I do outside of that to give back, but I'm only one person. What we do with rent control is there's some benefits of rent control. The benefits of rent control is the tenants expect their rent to go up because they know what's allowable. So they're already baking in that my rent's going to go up such and such amount. Some areas are only 4%, 3-4%. A while back, they halted it for a few years. So that was not good at all because then it just screwed up the whole system. But anyway, so that's one thing. A second thing is I made my first millions on holding a property and rent control property. As people moved out, we moderated the rent. It's get rich slow. I got in the business to be get rich quick, but it's get rich slow. And you need another source of income other than just investing, especially when you're just starting out. No one just goes in and all of a sudden buys an apartment building and then they can live cash free. I see a lot of people doing that, but they're not living in California for sure. They might be living in the back of a truck or something. But anyway, I don't know. I digress. But for also on rent control is that people tend to stay longer, so there's less turnover. So that's less cost out of pocket after you buy. And there's some really great areas in LA where the housing is worth $4,000 a month in rent. What Duane said is the reason why we're not scared is there's not an oversupply. There's always an undersupply. No matter how many buildings they built, they're all brand new and they cost too much. Ours is more affordable. The housing stock is 1960s, 70s, and 80s. They built something 2020 great and it has more amenities, but they cost a lot of money to build and then they have to rent them for a lot. So until they overbuild or figure out how to house all these people, I have no fear that we have people waiting. I feel bad for a lot of people because 90% of them don't qualify to come through our door. I don't know what's going on with them. I feel bad about that. But some of these people are moving out And I heard something about Texas, like half the people are moving out and then half the people are moving back. So I don't know. Duane has the numbers, but it's interesting. Everyone goes with what's shiny and good right now, but we have such a diverse economy here. We have more than one type of business. We have the ports in LA and Long Beach, and everything's trucked in near my neighborhood. There's jobs and the people have them. And I just want to help people get ahead by investing in real estate, because if you bring home a normal paycheck after taxes, unless you're some kind of guru genius or invent Nike or something weird, you're not going to make it. You're not going to make a lot of money. So either get out or figure out how to invest in real estate, in a business, something.
Totally agree with that. Duane, I'm going to ask you about this. Cap rates in California are lower than almost anywhere else in the US, which also tends to depress cash flows. So how do you make investments work in California?
Sure. One thing is making sure to buy a building that has upside rent potential, which that's what we're always doing. As we raise rents, we're underwriting and predicting cash flows around 3 or 4%, growing into as much as 5 or 6% as we get into the middle years of our hold period. So you can get some cash flow. Are we going to compete with what you could do in, I don't know, somewhere in the Midwest, maybe Salt Lake City, what somebody could get on owning a retail type outlet somewhere in the middle of the country? No. But you got to keep in mind the cap rate is an adjustment for risk. The reason why our cap rates are low is because California properties are less volatile. There's less chance of them going down. We actually look at it as an indicator of it being a quality investment.
Okay, so Bill, from your experience in California multifamily, why would you choose it over other parts of the US? Why are you staying in California?
I know it best. I like to play a game I'm good at. I know it for the last 40 years, so how it kind of ebbs and flows. I know what areas have gone worse or stayed bad and not improved. I know that buying a really rough area for some people is okay, but for me it's not, because you can't collect your rent and you can get shot collecting it or whatever, that kind of thing. I don't go there. And I think that what Duane said is very important, by the way, is risk adjusted. We're great because we have so much appreciation potential. And when we talk about 4 or 5 or 6% cash on cash return, there are models and there are actual deals that we're doing that are more, but they're mainly when they're already settled, or we added value to them and we stabilized them, and then we have a beneficial financing. As long as you don't over leverage, you shouldn't have a problem. We're not going to lose your shirt if you have good underwriting, good tenants, and you treat them and you pay attention to what you're doing. So as long as you don't fall asleep at the switch, don't answer the phone when someone calls that needs to rent it, those kind of things, you're going to do fine with real estate. So why this area? People keep coming here. Okay, I don't know. It's because they want to be in Hollywood Star. I don't know. It's because we're certainly, they like San Francisco for the tech. I don't really know why everybody comes here. They love the weather. They like the beach. Everybody lives within 2 miles or 3 miles or 4 miles for the beach, so they can get there quickly. Entertainment capital, sports is good. You can get a lot of that elsewhere. And there's a lot of places that I see kids going to college right now that are very exciting, dynamic. They're moving very well. They're appreciating very well. But we're seeing them slow down. We're seeing that they're getting too many people at once. They're getting too much infrastructure. They got to raise the taxes. They haven't figured it all out yet. This is a mature city. Long Beach is a mature city. LA is a mature city. And it's got its problems. It's got traffic. But you can also move to what they call the burbs, right? Suburbs. And a lot of people have. So, and a lot of people are working outside their houses, in their houses outside of work now. So there's a lot more. This podcast is coming from a podcast. It's not coming from a central studio. And so I just think California is great because there's always somebody there to take their place to rent the property. There's always somebody who wants to pay more. And that's helping increase the values, increasing the cash flow and the returns. So it's very solid.
Okay, so Duane, are there any advantages to California multifamily that make it better than any other place in the US?
Yeah, one thing that's for certain is you don't have to worry about the risk of people developing a whole bunch more units near your apartment community and then taking your tenants, because there's just very limited land left in a lot of these areas that we buy in. You can't really develop a new building unless you find something that you can tear down. Now, I think that's one of we don't really do development because it's a higher risk profile. But if we could get the right kind of resources together, I think we'd see a huge advantage. And you take a building that's really old and poorly maintained, buy it for the land, scrape it, put state of the art units on it, and we could make some really high returns that way. It's just that you got to be able to get through that, whatever it is. What is it, Bill? 1 or 2 years of development process, and you can get hung up in the city with permits. You got to be able to wait that out before your investment starts to pay off. So that's one thing. Also, we're always seeing buildings that people aren't properly managing. So when we buy them, there's a lot of potential for improvement and moving rents up. And Bill, this is going to surprise you, but I'm thinking, why don't we take these buildings and do a sustainability angle, make them green buildings, put in electric vehicle chargers, and make it something that's friendly to people that are working from home? Because working from home is not going away, or some people work a flex schedule where it's part commuting and part staying at home. So if we can offer them units that have those kind of amenities, I think we can get a rent premium. Bill, I know Bill's sitting there thinking, "Oh my gosh, it's going to cost a fortune."
No, I'm going to give a Duane answer, a yes and no on that. I'm so prudent with my budget. I don't come off that way to people, but we talked about this, but I'm so prudent once I take in a property that I have a budget. Of course, I've gone over it before, but I take away from someplace else. I don't go to my investors and say, give me more money in capital calls. I try to stick to what I can do. Of course, life throws you wrenches all the time. But the thing is, I try to do that. I try to give more open space, green space. People want outdoors, area to barbecue, have a dog, whatever, have people over. I'm trying to, this is not very technical, but try to get different kind of switches and outlets so they can plug their phones in and put that right by the landing when they come in. And I do little things like that. I've done a lot of research and done some trying to get some more. One of the things I do is I do a thing called rubs. And that's actually asking the tenant to pay a portion of their trash and utilities, their water. And what that does is that actually makes the tenant conscious of how long they're showering, if they're washing their car with the water, if they're doing too many cycles of wash. And when they get a leak, they call me right away to fix it. Versus if I pay it, they don't call me. So they're like, wow, you shifted the cost onto the tenant. That's so bad. In some of my buildings, it's $2,000 a month or something for water, and I split over 20 people, it's $100. But the thing is, that's also in addition to rent. So I bring down the rent to cover for that, because we don't need any rent control. As soon as I charge too much for rent, everybody tells me they're not coming to my unit, and I sit there vacant. We don't need this rent control. They're just protecting and buying votes for the 3 million people that are in it in Los Angeles. I'm all for helping people, but they have to give incentives for landlords to put money back in the properties, or they're just going to get worse and worse condition. And just completely stopping everything is not the solution. They're working it out. But they need to have advocates on both sides. But California is just super. No competition, not enough housing. Everyone wants to live here. High cost of living, sure. So you got to get that professional tenant. And to be honest, we're looking for the tenants that can pay and stabilize the property, because you buy an income stream. You don't want to buy someone that, I don't know if I can pay the rent or not. It's hard. There's people at 30, 40, and 50% of their paychecks go to rent. It's very difficult, but there's ways of doing it, right? They can go into a single or a 1-bedroom. They don't have to have a spare bedroom for their office unless they want it and can afford it. Blah, blah, blah. But
so is that where the title of this episode, "It's Impossible to Lose Your Shirt in California Multifamily," came from? Or like, where does that phrase come from? Why do you say it?
Go ahead, Duane, and I'll tell you my take on it
laughing.
too.
So that was my idea. And certainly, if you buy a property and you overpay tremendously for it, you take on way too much debt, and let's say it's got some code violations, a foundation problem, you can lose your shirt then. But assuming that you do your homework, look at your comps, and pay a market rate for it, and you can see on paper that, hey, it pencils out. The rents will pay the mortgage. Nobody else is going to be able to come out with a bunch of units for half the price because there's no place to develop it. We're almost 1 million units behind in how much housing we need here. So you're going to be able to get tenants. And we don't have the thing where we're getting overbuilt. Some of the markets in Texas where rents are plummeting right now because they overdid it. And they'll stabilize. It's not like they're, if you bought in Texas, you're doomed or something. But the next couple of years are going to be tough, and you have to be able to ride that out. With us, we don't really have those kind of swings. So I'm saying if you do your homework and you're reasonable and you take care of the property, it's pretty hard to come out negative on this and lose your money. And Bill, you could probably attest to this. You've done 70 of these, right?
Yeah, even a dummy like me can do it.
Now that's a really good sales pitch there.
But you know what? I keep getting lucky every year for 30 years. That's
There
what
you
people
go.
think. But the thing is, just if you take care of it, do the things he just said, ask questions, ask the professionals, pay a little money for tax work, pay a little money for the inspector. Every money I've ever spent in spending it for an inspector to tell me what's wrong, I've anticipated the budget, or I've asked the credit from the seller. I've made tenfold from that. So ask the experts, and rather than take all the risk by yourself, invest with someone like us, or invest with another person that's a little bit ahead of you in the game, and learn and play your position and get partners. That's good too. But to be honest, a lot of people have just come here, bought a building, held it for a while, and done excellent. I'd rather them buy a house or any type of investment than not to invest at all. There's better ways to invest, but the point is this: if you don't invest, you're not going to take care of yourself in the end. And you need to do that. You need it for retirement, you need it for extra income, you need it for lifestyle changes when you get kids, when you get cars, when you get let go, or whatever happens in life, or you get sick. Most people don't have enough money to take care of themselves, because putting a parent in an old folks home, good luck. It's a lot of money. And I don't think a lot of people have money for that. I really don't.
So then, Duane, what do you see as future opportunities for California investing?
I talked about the development. I talked about creating kind of a lifestyle experience in an older building. So our rent growth has paused a little bit. We had this huge acceleration coming out of COVID. It was a rebound thing, and rents went crazy in like 2021, and then they slowed down. So one of the opportunities I see right now is buy property now while the market's still a little bit cool. And we're looking at good projected economic growth for the country over the next 10 years. Interest rates are stabilizing. And I would say, and we're always saying it's a good, any time is a good time to invest, but I think the timing is particularly good now.
And then, Bill, what about you? Do you have anything else to add?
I agree with them totally. We're getting our hands on a $6.5 million property 2 blocks from the beach. We're loving that right now. That's a great deal that we're sending to our repeat clients. We're looking at more deals. We look at, 100 to 200 deals before we buy one. And then we underwrite a lot of those. Some of them have already sold because I always pick the best ones and someone else wants to buy them. They're not always going to me. But we're underwriting a lot of deals to find the best ones. I think the biggest criticism is, where's the next deal, Bill? That was great. You did that for someone else. What do you got for me? And I think they got to be patient. We had a gentleman call us that 3 months ago called us and said, hey, I want to invest right now. And we're like, hang on. We're trying to find the right deal for you, because you want to buy and hold, so we need a nice one. And now we have one. Called them back, and all of a sudden he's, thank you for making me wait. But a lot of people come to me. And they've got money burning a hole in their pocket. My mom just died. I got all this money. I got to spend it right now. Hang on. Figure out what you want to do with it. Have a financial plan for it, or it could be gone at Vegas tomorrow. So our market's just been really good for a long period of time. I think it's going to continue to be good. It ebbs and flows like any kind of market. There's never a straight line up. Like the graphs indicate, they move. So you never know where you are on the curve. Smart Duane's got some great things to say that it's a good time to buy. We thought the interest rates were going to be much higher than they are. They're already starting to pull back. They might pull the other way. If the deal can't stand on its own right now, I'm not buying it. I'm not waiting for somebody to the winds to blow a different direction. It's always nice when they do. but you got to plan for, expect the best, but plan for the worst. And we do that. We do a lot of underwriting to say, what happens if we take too much loan out here? Oh, what happens if we don't get those rents? What happens if the property goes down? Generally, it's like a stock. You wait for the dividends to come in, which is the cash flow, and then you don't have to sell it even if the price goes down. And the way I protect the downside is I'm always buying the best deal in the market, because I've been a broker a long time. I know my area really, and I adjust for these factors. And I say no to a lot of deals. I'm not a total ground dweller, but I do have grit, and I know what prices are selling for. And brokers bring into me, and I go, you're going to sell it this $3 million building for 2.8 or less, and I'm generally right. I'm not always right. But when they sell, the brokers come back and go, how'd you know that? I go, because I know what I'd buy it for, because I'm a buyer. And I'm always knowing when I buy something what I can sell it for. That's because I began in a wholesale and a retail kind of mindset from a young boy. So that's why where other people are doing it, they're not got my experience. So they're just buying it and hoping and wishing things happen. There's no mystery why we do well. We work hard and we make small incremental changes in a lot of different areas.
I love that. Duane, do you want to wrap it up?
Sure. Let me throw out a couple really quick statistics that I came across when I was looking into this blog. So California and New York have the highest number of young, high-income residents. That's people between the age of 26 and 35 earning greater than $200,000 per year. So some people might be leaving California, but we have a ton of professionals making good money. And as far as just how much wealth is here, California has the highest average net worth, except for the state of Connecticut. We're number 2 in the United States. We will continue to be big believers in California. We're biased, we live here, but we do know that it's a good economy and a great place to make money in real estate. If you want to learn more about our company, see our track record and some case studies on investments we've done over the years, look us up at www.trwealthmanagement.com. And thanks for joining us.